Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If you're new with us this week, let me give you a quick rundown on how things work. First of all, we start off with this disclosure/disclaimer. It's important. It's a requirement every time we do one of these webinars to show it to you. So if you're brand new, please take a screenshot of it and read it in detail in your leisure. I will highlight a couple of things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, we have a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Okay, for the rest of it, again, just go ahead and take a screenshot and read it in detail. So the process on how this works is we'll take a quick look at the market update. Market's been pretty interesting. If you've been watching any of our videos or recordings lately, I don't think anything that's occurred has surprised you with this back and forth right around the 381 level. Major FEB extension, 100%, proving to be major point of support resistance. We'll go through and take a look, and we have one to show you, which kind of ties into some current events that have been occurring that I'm pretty sure you're aware of as well, of alerts that we have sent out to our subscribers. And we had a whole list of them last week that we captured. We've got another good one this week. And then following that, we'll go through and look for a case study consideration for this week, as well as reviewing the case study considerations that we've looked at over the past couple of weeks here in TradeFinder. And they've been moving. Hopefully you've been following those. If so, then you should be pretty happy. But we'll take a look at those. In addition to, got a little bit of a tidbit for you that I think you might find interesting. So with that said, let's go ahead and move into a quick review of the market. And the reason I said that, if you've been following us, look where we closed today, 381. Where have you heard that number before? Obviously, it's way back, going back into June when we started this zigzag pattern, and back towards the end of September when we hit that 61.8% FIB level. We talked about the 381 extension for a long period of time. We hit it. We went sideways through that level, broke to the downside, broke to the upside, broke back to the downside, and now here we are right at the 381 level again. So as you can see, with the moves, we haven't had confirmation on anything. And that's why you hear me say so often that you have to have a follow through, a confirmation day. We broke above it, no confirmation. Drop down, try it again, no confirmation. Drop below it, no confirmation. Drop down again, no confirmation. And here we are right back to 381. So not once in this entire month, basically, of January, since we've reached that 381 level, have we had a confirmation day on a break of that 381 support resistance level to the upside or the downside. Once we do, then we'll have a better idea of where we're going. Are we going to make the run to 420 without first testing this previous 61.8% level? The market will tell us. At this point, there's no way to know. And this is where, with Elliott Wave, it did what it's supposed to do. Now we wait until the market tells us which is the next pattern. Either one of them's fine. It doesn't always have to, or the market or the security doesn't always have to test the previous FIB level before going to an extension level, but it does quite often. So it wouldn't be a surprise to see us move down, which looked like on the 29th, that looked like what was going to happen, that we're going to come down and test the level, but it didn't follow through. So we'll wait and see if we get any follow through to the upside over the next couple of trading days to where we can make a run here. At this point in time, we have to respect the possibility that we're just filling this gap right here. We already filled this one. Maybe we're just filling this gap when we head down, or maybe that was it. This was a little bit of a shakeout, get rid of some of the weak hands, some of the weak longs in the market, and turn and run back to the upside. So that's what we're looking for, is give us a confirmation day either on the break higher or the break lower of 381. And therefore, we've just been taking advantage of our alerts that have been working, haven't added a whole lot of new stuff until the market gives us this direction. It's just throwing caution at the wind. We've had plenty of strangles on. We put those on in anticipation of this kind of stuff in January, and they've worked great. So they did their job, and things are still moving. And so we're paring down positions a bit, taking our gains where we can, and then waiting to see which the next move is going to be confirmed. And then we'll start to add a bunch more alerts again. So that's pretty much where we are as far as the market. There's nothing that has gone on in this market that is a surprise. Nothing. Now, one thing I would point out, and this has been something that we talked about Thursday night with our insiders meeting, which is something we do every week for our subscribers only. So you have to be one of our alert subscribers in order to participate in that meeting, is the fact that we do have the looks of a little bit of expanding. We talked about that on Thursday night as well. I can't remember a year, honestly. And so, we're in the next year. So going back 12 months, that there's been this many expanding triangles, and triangles have been a big part of my trading for a very long time. It's kind of how I made my name in the world of options, is with these strangles that we do. And so I've noticed and watched and looked at strangles and triangles for a very long time. This has been a very unusual year. Lots and lots of expanding triangles. So it's almost like they're kind of trying to sneak under the radar. But you can see what happens here. It's just the reverse of a normal triangle. Now here on the left side is the point. That's where the smaller bars are. And then as we get into the mouth of the triangle, you get the larger bars. But the result, whether it's a contracting, the more normal look of a triangle versus an expanding, you still get the breakout. And at this point in time, we still don't know which direction that breakout is going to be. And so one of our subscribers said, well, should we just put a strangle on the SPY? And we may do that very soon. Right now, we have puts to protect from the downside. We have upside positions, and we have strangles. We're very balanced right now, which is where you should be when you're at a major point of resistance. So with that said, let's go ahead and move into a case study that we sent out to our subscribers, an alert that I wanted to share with you, and I've got some commentary along those lines as well. One final point before continue on is please ask questions as they come up, but know that I'll save the questions for the very end. I don't want to interrupt things. It's the way my mind works. If I stop and take questions and get back, I'll lose my train of thought, and there's important things that I want to share with you first. So we'll take the questions at the end. We'll get to as many as we can with the amount of time that we have left in the session. If we don't get to your question, please don't think that it wasn't a good question or that we're sliding you for some reason. It's just we only have so many minutes to go through this, and there's lots of people on these webinars. So we'll get to as many as we can in the time allotment. And if we miss yours this week, hopefully you'll come back again next week and ask it again. So with that, I wanted to go through and show you our case study that we did on SLV silver. Now this ties into what I wanted to talk to you about, which is the whole Reddit Robinhood thing that's been going on. I'm sure you've heard about it. I've cautioned people in these events, cautioned our subscribers that periodically ask questions about it because it's all over the news, it's all over the media. And the chat room on Reddit that they have, whatever, it's super risky to play in that space. Today was a really bad day if you were doing that. And I mentioned this last week. Some of you even made comments about it, that there was big money. See, these guys in this chat room think that just because they have a whole bunch of people that they're big enough to move the market and they can create this short covering. No, they're not. There was big money behind them that was helping to push out the shorts and create the short covering. They, no matter how big they think they are on the retail side, are not big enough to cause hedge funds and big money investment companies to cover their positions. Sorry, guys, you're not that big. However, when you have some power behind you that are watching this phenomenon that's going on and they come in and they jump in and they follow through, then yes, now you have enough power to create the actual short covering, and you have those big moves that you saw in GameStop and AMC and the other ones. You all know the names. You're familiar with them. You've seen the news. You know what's going on. But what happened today? See, the big money guys bailed out today. They're smart. Those big money guys are smart. They bail out. And what are all those chat rooms saying? Buy and hold, don't sell, thinking that if you buy and then you hold, the stock won't go down. That isn't how things work. That's yesterday. Today's a new day. If nobody's buying today, just because you're holding doesn't mean the stock isn't going to go down. If nobody's buying today, guess what? Stock's going to go down. And so when the big money guys pull out, then they can drive things back down. And all those guys that were on the whole buy and hold thing, don't let it go down. Now they got a really, really bad day today. It was ugly because the top 5 ones, all of them were down significantly today. It's a very dangerous game. I say please stay away from it. But if you insist on playing in there, be one of the smart ones. Don't get greedy. Greed kills. It really does. It always has in markets. If you want to jump in, we've benefited from it. We've had a few positions on that got involved in some of the short covering, and we didn't hang around. We took our gains and got out. Some couple of them we could have stayed a bit longer, but that's when you start to get greedy and things can turn in a hurry, as a lot of people found out today. Silver was one of them. We were long silver. We've been long silver, not because of anything to do with any sort of a squeeze the shorts, which is what they were talking about Sunday night. The whole thing when they came on is, a silver squeeze, a hashtag silver squeeze, and all this kind of stuff that they thought now they've moved into a whole different realm. It's one thing to talk about going through and squeezing out short positions in a stock like AMC that's trading lower. But when you start moving into the metals, now you're dealing with central banks and you're dealing with big money players. And sorry, I don't care how many people they have in that forum. It's not enough to move the metal space. Not when you're going against the Federal Reserve and other countries' central banks that have unlimited capacity to create money or to manipulate these things. Not going to happen. So the fact that we were already long silver, when I saw that hitting all the news wires on Sunday night, I thought, well, if we get a gap up on Monday, we're going to take that opportunity to take the position off. That's exactly what happened. So here's where we were when we rolled our silver position out, because we already had a couple of up days. And so we took gains here and then rolled out a little further to have another position in silver. And as you can see here, we had 2 closes where we sold our position for 536 and then the ones that we sold on Monday for 648. And if you're not familiar with what happened in silver, here's what happened. Here's that gap up. Okay, so first of all, we got a gap up. You've got a run here. Silver was up 11%, which is one of the biggest days it's had in its history, especially with the ETF, the SLV. So you can see, where I'm going to go here now with the 10-day moving average. So let's move back over to where we were yesterday on Monday, and you can see where we opened. There's that little notch to the left up there. Note that the notch to the left right there was the open, and we didn't trade much higher than the open. In fact, when we sent out the alert, we almost hit the high tick of the day when we sent the alert out to close the position. So it's also a lesson of don't dilly-dally when the alerts come out. Try to get those filled as quickly as possible. We had some with some of these runs where we got out and people that did take their time got a better price. It averages out. So, just execute as quickly as you can when the alerts go out, I think is the safest thing to do. But we came down, but it still was a big up day regardless of where we were based on the close. So we took that opportunity, and then you have to wonder, well, are they going to run this for a few days like they did some of those other stocks? I just didn't think so. It was a personal opinion. I just felt like, they have no idea who they're messing with now. This is a whole different league, as I mentioned earlier. And then you can see what happened today. Big down day in silver, back down 8%. So yesterday we only closed up 7%, even though it was up 11% at one point in time. Today we closed down 8%. So for the 2 days, we're actually down a percentage point in silver. So much for the big silver squeeze that they thought they were going to be able to generate. And there was people talking about, when they find out there's more paper requests, paper demands than actual silver, we're going to blow the roof off this thing or go to the moon or whatever it is they say in those rooms. I'm just saying that I've seen this is so eerie, and this is even worse than the dot-com stuff was in 1999. Just please be careful. You know, if you're dabbling in it and you're dabbling in just play money that doesn't mean anything to you, and you're just trying to see if you can catch a home run or whatever, you know, more power to you. Good luck. Be safe, and don't be greedy. Are the things that I can share with you. And again, we've benefited from it. We've been in the right place on a few of those moves, but they don't last. And that's what everybody found out today when all of them came back down to earth, as the big money abandoned them and let them hang out to dry on their own. But we did a good job with silver, and it worked out for us. Fortunate in some respects. Our position was designed to be more long term. I just told our subscribers in our call Thursday night, we're in this for a while due to the fact that the underlying fundamentals of the amount of money that's being printed through central banks with the stimulus programs, what's happening to the dollar, interest rates, all of it wrapped up is bullish long term for the metals. Wasn't expecting this. It's kind of a gift that was handed to us. So we're like, all right, let's take it and move on, and we'll wait and we'll watch this. Now, I didn't really know that we would come all the way this far back down today. So we'll look maybe to reset up. What our original idea was this is going to be a longer term position. So wanted to share that with you because I wanted to give you some commentary along those lines as well. Also wanted to show you something that if that's something that you're interested in doing, when you're playing in these lower dollar stocks that can move with, you know, you're just an adrenaline junkie, and that's the kind of thing that you're looking for. People ask all the time what this software program is, and it's called ProfitSource. You can find out more information about it at ProfitSource.com. It allows you to create your own searches. And for our subscribers, you've seen this, and we'll be looking at it again tonight. But if you've been with us before, you know that on the pre-computed scans, we have the Elliott option scans, which are my scans. The people at ProfitSource incorporated my scans for our Elliott option subscribers. So if you're an alert subscriber and you have the program, you can follow along with the searches, exact same things I look for. And so that gives people another learning opportunity that are subscribers, that they can send messages and say, hey, I noticed you didn't place this trade. Why not? It was on the search. You did this one. Why this one over the other? It's a good learning tool to be able to see the same thing I am. And so then, you know, on Thursday night, when we go through every single alert, then they get the thought process of why. And in the meantime, they can ask questions because we have a great support staff, and people can ask questions directly to me if they like to as well. So it's an amazing learning tool. That's one thing. The other thing is that you can create your own searches. And so I created one. This is just arbitrary. Now, this would be what I consider high momentum stocks. So when you take a look at this, let's just go through this real quick. And you can see here's the game that I don't want to play. So right off the bat, the very first one on the list, there's a big update yesterday. When you go vertical, what happens? Talked about this so often. I know my subscribers are tired of hearing about it, but I'm never going to stop talking about it. I don't like stocks that go vertically like that because when something goes straight up, it comes straight back down. What just happened with silver? Vertical yesterday, vertical back today. So that makes me nervous when you see stuff like that. So, but look, it's a $6 stock. So if you're interested in trading something, why don't we put some technicals behind it? Is my point. This is what I'm trying to share with you. If you want to do this, if you want the high adrenaline stuff, if you're looking for the momentum things that can move a lot, that are single digits and stuff like that, well, let's do it from a technical standpoint rather than a bunch of people trying to force some short sellers out and being at the mercy of the big money to follow along with them, and then not knowing when those guys are going to pull out and have a day you had today. Let's just do it from a technical standpoint. So this one I wouldn't be interested in, but look at the next one on the list. Okay, so tried to run to the upside yesterday, didn't hold it, did today. Now we have some support from the DMI and the other indicators that I like to look at. So basically all I've done is taken the general searches that I look for, and I isolated wave 3 because that's the strongest of all the waves. You could bring this in and look for wave 5s as well, But if you're wanting to find something with momentum that can move, that's a lower dollar, that's optionable, so we can find they're optionable. They can find that they follow all the indicators that I look at. They're in a wave 3. You can do all that stuff. You don't need any of those chat rooms that are going to get you killed in the end, because it's the same story that happened in 1999. I've said this. I can't tell you how many times I've said this over the last couple of weeks, but in 1999, it ended with people jumping out of buildings. And I'm not saying that in jest. I'm saying that out of empathy and sadness for people that were getting in over their head. They were doing things that they didn't have enough education to be doing. They made a lot of money at it for a while, and then they got wiped out, and they felt lost with no recourse. And so I just don't want to see anybody go through that again. The whole reason that we have this service of Elliott Wave Options is to help the average person try to learn to trade for themselves so that they can generate a subsequent income to whatever you like doing, or trade for a living, whatever your goal may be. We're trying to help people. We're not trying to get people to the point of despair, which is what happens when you get on those momentum things like that. It just always ends badly. And so you can look at me and say, I don't know what I'm talking about, and I'm crazy, and it's different this time. And you can say all those things, and you can disagree with me, and that's fine. I respect your opinion. But I have mine, and I've been around trading for 25 years plus. It's a lot of experience. And so if guys have been trading for over 25 years and tell me that I'm nuts, then okay, fine. But what I wanted to do was show you possibly a little more responsible way that you could play in the same kind of space as what those guys are doing, but do it with some basis, with some technicals. And then you can come in here and you can add volume onto them. You know, are we having above average volume? The 200-day moving average is what I look at for volume. I don't want to see what happened over the last 5 days. I want to see, is the volume greater than it's been over long periods of time? So this is a better looking chart. I haven't looked at the options. I just did this with you. I just ran it 5 minutes before we started, so the search would be run before we started. But you can see there's a whole bunch. There's 48 potential ones that you can look at. And we're not dealing with, trying to convince people to cover shorts or anything like that. We're just looking for stocks that are in nice momentum runs that are lower dollar. So I'm a little bit passionate about this. I'll move on now, I promise. But I did want to spend a few minutes to go through and show you that I know you've heard about it. It's been all over the main financial networks, not just in the chat rooms. All right, so let's go back and take a look at, this was Duke. So this was the 12th of January. This was Duke Energy. And so if we move that one forward, so we close there at 88.93, and we're now up to 93. So we've had a 5-point move to the upside. Probably not enough to take that one off yet, but moving in the right direction. So that's a good thing with the strangle. Then XLK, we were looking at this, the technology sector, and we can see that on the 19th, we closed at 129, and now we're up at 133. So nearly $5 move to the upside there. That one might be looking, depends on what your own profit targets are. Remember, when we do TradeFinder, we just create case study considerations, and then you make the decisions on, whether you want to follow a position, when you get in, when you get out. Our alert service for our subscribers that they pay for, we send out, exactly what to do when you get in, any adjustments, and exactly what to do to get out. So we hold your hand through that whole process. And that's what the subscription fee covers. So at this point, it's you decide when you are happy with your profits or when you want to move out and when you want to move out. But the results have been spectacular since we started this TradeFinder service. I don't know how many months ago we started this, and we may be coming on. Are we getting near a year? I wonder if we are. So here's DCI, and you can see this wave 3 that we looked at, and this was just last week, and that was a close at 60.56, and now we closed at 61.30. So just under $1 to the upside, but it looks like it's trying to break out. Let's look at the DMI here, and the ADX had fallen back down, but now it looks like it's trying to move back to the upside. Now you can see that we had a little bit of resistance here. So the same rules apply of we break above that, we need the follow through day. So my point is, today looked like a nice day. Let's see what the volume looked like. Not a lot of volume. So that tells you today's meaningless. I bet, just off the cuff, that if we move to the upside tomorrow, I bet that volume's higher. So if we get the follow through day on the wave 3 to the upside, I'd be surprised if we didn't break the average volume, because I'm not the only one that knows that you need follow through. People that have been around a while, the seasoned traders, know that there's a lot of head fakes that occur in the markets. The big boys, if they can take advantage of you, the retail traders, they absolutely will do that. But it doesn't sound like that's the way things should be, but that's reality. And they love taking advantage of the chat room stuff and all. We had Yahoo groups before. It's so interesting about how history repeats itself and how the same scenario is set up. Instead of Reddit, it was Yahoo groups and stuff. It just cycles over and over again, and you see it, and you're like, please don't do that. Anyway, so there's a pretty good history of what we looked at over the past 3 weeks. So everything is moving in the right direction the way they're supposed to. So at this point, let's go through and see if we can find a case study consideration for tonight. And then we'll open it up to questions. And I'm sure y'all are chomping at the bit to ask some questions. I did want to go back and make one more comment about silver. And I noted that we kind of hit the high on our exit, and then the stock closed back down and moved back to the upside here. And that's why I was saying that, execute your positions as fast as you can when we send out alerts. We've had some that move to the upside. We have some that move to the downside. After the alerts, it balances out in the end. So, I mean, it really does. All right, so our pre-computed searches, we'll go back over here, and there are 2 on the impulse. So what I usually like to do is put that, and when they added the bullish wave 3, let's see if either one of those 2 are in the wave 3. If not, then we'll come back and look at them anyway. And they both are. So that's good. So the 2 results that we had, because now what we did was, and these were added in as well for customized searches. So the search that I created here, here's all the criteria and stuff. And so I had to let that run. That's why I said I ran that search before we started. These pre-computed ones, it's already run for you. It's automated. So as soon as the software updates every day, boom, the results are there. You don't have to wait for them to run. It saves you time. And this is the instant gratification age, right? I mean, we want everything now. We don't want to even wait 5 minutes for a search to run itself. It's amazing. So you can run this and compare it with the wave 3s. So you can see 493 stocks are in the wave 3, or is that 83? But between the 2, there's only 2. So let's take a look at this MDC. This one shows up quite often on the search, and then there's all the other indicators. So I take these off, and then I leave just the DMI, and that looks pretty darn good right off the bat. And it looks really good. And the reason I say that is here's that wave 5 high, the previous wave 5 high. Then we started a new wave 5 pattern, and we came down and tested it right here. Just to be specific on the area I'm talking about, right here, we tested that previous wave 5 high, and yesterday we broke above it. There's your follow through day today. So that's what a follow through looks like. So we bounced off the testing level. You can see there was all these days right in this area. We broke up above it yesterday. Nice follow through today. Let's see if we had maybe some decent volume behind that. There you go. So that's what usually happens on a follow through day. You have better than average volume, and the DMI couldn't look any better. So let's take a look and see what the options look like, because we might have quickly found our suggestion for this week, the first one that we looked at. That would be nice, wouldn't it? Sometimes it takes a little while. There's some liquidity here. Not a ton, but not bad. March options. Then you jump out to June. June doesn't have as much liquidity, but the spreads aren't that wide. Really? I mean, they're 30 cents wide going out to June with low open interest, but there's some open interest, so it's not awful. So you could either pick March or June. Either way, there's far more open interest in the March options. Same, there's 30 cent wide spreads, whether you're in March or June, which is interesting since March is more liquid, but that looks pretty good. So we closed at 55 and we have a lower ended target at 60. So up towards 63-ish or so, we could move to the upside. So before we get too excited over that one, let's at least take a look at the other one and give it some equal respect before we finalize that one. AXOS Financial. Heard of this one. I'm not sure I've ever traded it though. Now this is a whole different picture, isn't it? Look how long that ADX has been to the upside. So we've had a pretty nice run here. There's that 45-degree angle that I like, and you can see why. So we had a correction, but the vast part, he tried to say, of this move held. That's why I like the 45-degree angle moves, not the vertical stuff. Vertical goes up and comes back down. The 45-degree angles, things go up and down, and so you get impulses and corrections no matter what's going on. But when it moves in a 45-degree angle, the corrective moves tend to hold. So we had a little bit of a correction, and we bounced right back above it. That one doesn't look bad either, although, man, that ADX was up there for a very long time. So, I mean, it was elevated in October. It had made a run back in August, but we'll forget that one. So it was elevated in October and got above 40 in November, got above 40 again in December, got above 40 again in January. Man, at some point you have to wonder if it's going to start to run out of juice. Now the CCI is saying, hey, we could be ready for another run. And that's why we have more than one confirming indicator to look at. With the CCI, history is important. We did, for those of you that may be newer with us, an entire webinar on all of our confirming indicators. And we have several confirming indicators that come together and create our technical trading system that we use to run through and scan the market. And then we apply Elliott wave to those results. And so we did a webinar on each of those indicators. The CCI is one of them. It's called Trade Scan. It's on our website in the educational page, ewotrader.com, if you wanted to go check it out. But one of the things that you learn about the CCI is history matters, not so much the scale over here. The scale varies for every stock. So it's still above zero is momentum, and below zero is not good. Momentum to the upside. But going back and looking historically matters. Like, you want to know what is a normal high peak for this. And so here, looking at this, you could see clearly that right through there was the average. The peak that occurred in January was above average. So it looked like that's about the end of that move, which is exactly what happened. So we got above average, and so it went sideways, came back and moved to the downside just a little bit, and now we're back above the 10-day moving average. And based on the CCI, there's room to move back up at least to this lower target here, which has been the more consistent one. So the one in January there was extreme, and that should have been a red flag if you were in this position. Hey, it's time to get out now. We've exceeded the norm here on where the stock usually goes. But in this case, there's still room to go there. So maybe it turns and makes another run. I prefer, and those of you that have heard me talk about the DMI in the past know that I prefer when the ADX has had a run like this and comes back down, that it does come back down below 20 before it turns and moves back up and makes another run. And that's just simply because of the mechanics of how the DMI works. The ADX crossing from underneath 20 above it is a strong signal. So when it breaks above 20 between the two directional indicators, that's a strong signal. So if you've had a stock that's had a run and then it's resting and it's looking to go again, it has more room to go, if it makes sense, if that ADX came back below 20 and we're kind of resetting and starting over with a full momentum run to the upside for the next one. Now I feel like we're kind of, you know, we've already spent some of the fuel, if you will, and how far to the upside can we go? The wave 5 target is considerably higher. So that makes you interested in this because we're trading at what 42, call it, on the close, and 52. So another 10 points to the upside is where we could potentially go here. You know, I just don't see that occurring on this run. Even if that ADX turns and moves back to the upside, that's what I'm saying is I feel like, you know, we've got some resistance here where the previous 3 was that we've got to get through. I would have much preferred that ADX to have been lower, break through there. There may be some further upside out of this move. I don't think this move makes it all the way to the wave 5 target though. So for my personal opinion, whatever that's worth, between the two of these, I'm far more interested in this one. In fact, I'm so interested in this one, this may go out as an alert to our subscribers tomorrow. We'll see how it opens in the morning. But for now, with the information that we have available, we're going to call MDC to the upside as our case study for this week. So our official case study, and we've tracked them all. So we know, and if you've been with us over time, you know how well these case study considerations have done. It's phenomenal, really. We'll see if this one stays with the theme and continues to the upside. Just because it looks really good, you know, there's nothing that's 100%. There's nothing guaranteed in the world of trading. You put as many percentages in your favor as you can, and then you follow the patterns. And if you need to adjust, you adjust. That's the way we do things. So if a pattern fails, we know based on Elliott wave rules what's supposed to happen on that particular pattern failure. So we don't walk away. We adjust. You saw the number of adjustments in the SLV, and it worked out that the people that followed the adjustments that were newer subscribers, home run trade. Even the people that were in from the very beginning and went through the adjustment process still ended with a profit. And that's the way we hope things always turn out as we have stocks that we may need to adjust over time. But as I said, that one wasn't any sort of surprise because our plan was to stay in the metals both. So we still have a position in GLD, but let's take a look at that one real quick. And then we'll get to some of your requests with the time that we have left. So you can see different story there, right? I mean, just not the same kind of movement. Talked about this for a while. We have a strangle on GLD. We had the straight calls initially on SLV, and we're looking for GLD to move back to the upside now as well. But the initial position was a strangle. But it's just SLV is leading gold at this point in time. Silver's leading gold is what I'm trying to say, which you've heard me say before. Fascinating for those gold bugs. Not nearly the move of gold. I mean, really getting into the big boys now. And all of that chatter was, you know, the silver squeeze first and gold will follow. No, it didn't. It did to the downside today, but it didn't have that 11% burst to the upside that silver had. So yeah, you better have some serious power behind you if you're going to start playing in the same pools that the central banks do, and do your best to be on the same side that they are in those positions. So I had a few requests that came in ahead of time that I'd like to look at first before we move into some. I know you've got a lot of questions on the board there as well, but let me get through these as quickly as we can. I'd like to respect people that you know, may not be able to attend, still want to see their stocks looked at. So, you know, if you want to send them in through email, we can do that as well. Again, no guarantees we're going to get to them all. Every week is different on the amount of time that we have. So VIAP, VIC, I think is what it is. Yep. And little triangle forming there. Wish it was bigger. It's in a wave 3. Big old, see that ADX is telling you that the strongest part of that move is over. That makes me nervous on this triangle. Elliott would tell you that there's a higher likelihood of this triangle breaking to the upside because it's in a wave 3 to the upside. I share with our subscribers that I prefer what we call the trader's approach, which is knowing that triangles by their nature can break either direction. So why pick one? Even if there's a lean on a percentage that it could break one way, you know, if we cover both positions, and we don't care. There's no preference whatsoever. It doesn't matter which way it goes. It just has to move. So I prefer to, you know, with our strangles to cover both sides. And that's what we like to do. With the ADX that high, could it break to the upside? It could, but how far can it go to the upside? With an ADX that's near 60, that's about as high as the ADX ever gets. So that one would be my concern there. NTAP, which blast from the past. Network appliances used to be, now it's NetApp, because everything has to be abbreviated. Remember speed. Big time support level right here at 65, as you can see. So it had a big run. We'll see if yeah, see, there's the ADX coming down, but again, it hasn't come down. It doesn't have to. I want to point that out. Just because I prefer the ADX to come back below 20 doesn't mean it has to. Doesn't mean the stock can't break from the upside here. Before we talk about this sideways pattern here is kind of the launch pad effect. We went super sideways here. It tried to blast off, no follow through, came right back down. So we're resetting. So we had an engine failure here, if you will. So we're trying to refuel, and we'll try and start again and see if it can blast to the upside. And I really think a lot has to do with the fact that ADX is so high. Where's the juice? Where's the fuel, the momentum for the blast off? And I prefer to see the ADX come lower. But the ease here is that if it breaks below 65, then if you're long, you may want to consider protecting that or exiting it, because you're probably coming down here after 55 to fill this gap that's right here, and create your wave 4, which again is normal course through the progression to the upside, but maybe you don't want to wait for the wave 4 correction to occur and then the subsequent run, you know, into summer next year to break to the new wave 5 high. Maybe you'd want out before then. So if you're long, you wouldn't want to get out as long as it's staying at 65 or above. I don't know that it's a great entry if you have no position in that at all at this point in time. BBY, Best Buy. Pretty good wave 4 there, right at the 38.2% fib level. DMI, I just don't really see anything here. ADX is high, it's coming down. Both of the directional indicators are heading down. You've got support at 100. If you're long this and it drops down to 100, I wouldn't panic, because that's where the wave 4 is, and you have this support area here. There's more of the blast off that occurs. So there's your launch pad, and there's the blast off. And so it went up 15 points. That was about it. And you know, if it comes down and tests this 4, resets up, I mean, we could test that wave 4 and then move back to the upside. So again, if you're long, as long as it stays above 100, you're okay. If it breaks 100, I'd get nervous. You might consider exiting or protecting yourself, because there's another one with a gap that it probably wants to come down and fill. AAP, Advanced Auto Parts. So we go sideways forever in this trade. There's a whole bunch of ABCs. If we had more time, I'd label all those for you. But this is when, that's what you look for when you want to do an at the money butterfly, which is why butterflies became popular in the first place. We changed it and made them directional and look for out of the money butterflies. But that's the pattern that you're looking for an at the money one, with a whole bunch of these ABCs bebopping here between 140 and 160. So it tried to break out, couldn't do it, and fell back down, right back into the trading range again. So now you have to start all over again. So from this pattern, that doesn't mean anything right there. But it's meaningless. We're back below 160. So we're back as 160 being resistance again, and the potential of moving back and forth between 160 and 140. ADX is too high for a strangle. I really don't see anything. I don't see anything interesting there either. But those are your levels if you wanted to do something. NVIDIA, we have a strangle here for our, we call it the high value strangle because it's an expensive stock. So the strangle exceeds the normal. We usually cap our alerts at $500 of risk per alert. But then we have a category based on popular request from our subscribers to be able to do some of these higher dollar ones. And this is one of them. And you can see that the triangle is extended. Normally when you have a triangle that extends like that, it becomes frustrating, but the breakout is larger. So here was the original triangle right there. And so you can see it formed a larger one. That's frustrating because that's time, right? Tick, tick, tick. Every day that goes by is time decay. But normally when you form a larger triangle, and our subscribers that have been with us for a while have witnessed this, the breakout becomes more volatile. So you get a larger breakout. In the end, the patience becomes worth it, paid off. It's just no fun while you're sitting around waiting on it to move. So someone that was in there, just it's going to break out at some point in time, and somebody hadn't gotten into it yet. It still looks pretty darn good as far as a potential to move. You can see that the ADX is just hanging around right around that 13 level, which is what we look for. Broke down just below it here back in December, and that's when we were at the peak of the triangle right here. And now we're just forming a larger one, and we're going back down to test that. So maybe getting ready to break out here. With the retest of the 13 level. eBay, then we'll take some from the live questions. A 5-wave pattern on eBay. Let's see if the ADX is, if the ADX is high. You're already probably seeing what I was looking at. So we're at resistance here at 60. We've got a pretty nice set of higher lows there. So a pretty decent ascending triangle, but I like the low ADX. Telling you it's getting ready to break out. This could just continue to churn sideways based on the ADX being that high. So I don't see a whole lot here either. If you're long, you want to see it break 60 because then it could take off. If you're looking to get in, you want to wait till it breaks 60. Problem is that ADX is so high. If it did break 60, how far can it go? Because there's just not a lot of momentum left. TSCO, we've talked about that one a few times. And we ran up and came back down. There's our resistance, and we had a pretty decent set of higher lows setting up here, and then we broke below that. So we have a pivot point right here on the wave 4. We'll see how that plays out. We could be getting ready to, or it is getting ready to take another run at cracking that resistance there at the wave 3. So you can see it was the wave 3 resistance back in August. And the wave 5 couldn't get above it in October. Tried it again in January. For whatever reason, stock can't seem to break through that 160 level. Wouldn't mind seeing the ADX get a little bit lower there. You can see it was looking really good right through here in this area. But we just didn't have enough momentum left to break above that. Maybe this time it catches itself and it has enough. We still have a target there about 170 for that. Workday, right? WDAY. Workday. Woo, nice day today. So there's some follow through. Let's see. Are we extended? Not too bad. Wave 3. Nice breakout. Boy, no signal from the ADX yet, but this could be ready to really do something if if that ADX breaks above 20. And this is what I always talk about. People can look at this and say, well, look at that. The positive directional indicator is going vertical. The negative directional indicator is going vertically down. That's as good as it gets. The ADX is curling up. Let's go long. this ADX is only a day or two away from breaking above 20 and being between those two directional indicators. It's not, though. It has to break that level. It's not there yet. And we're at a little bit of resistance here from the previous wave 5 and those highs from December. So if we get another break to the upside tomorrow and that ADX does move between the two directional indicators and break above 20, that wave 5 target may not be high enough. We might be looking at an extended wave 3 here and maybe an extension or a serious extension, he tried to say, of the wave 3. That one looks pretty interesting. Workday looks really, we'll make a note of that one for our watch list for next week and see what ended up happening, just out of curiosity. And I like looking at these things throughout the trading day anyway to see what things are going on. Okay, TA. I always think of okra every time I see this. The vegetable. All right, so 56% on the wave 4 correction. A couple really nice days to the upside there. Same exact thing with the DMI. It's almost the identical pattern. So you want to see that ADX break above 20, get between those two indicators, and you could have something significant going to the upside there as well. DraftKings is DF. What is it, Pankaj? DFKS? DraftKings is. What's the symbol? Send me the symbol, Pankaj. Something like that. I'll go to some other ones too. Tell me what it is. NVAX. Janice, yes, the confirmation day needs to be the next day. Very good question. Excellent question. We have to have the second day, confirmation day, for it to matter. So it needs to be the next day in a row. It's an important question. So NVAX, holy cow. Yeah, you already know what I'm going to say here. I don't know. Novavax, is this pharmaceutical related? Is this a phase 3 trial or something? I don't like this vertical stuff. I'll never like that. Maybe this one runs more vertically. I don't, if there's news, something really significant that's behind this, but from a pattern standpoint, the DMI looks great, but we are way overbought. We're way overextended. I don't like the vertical moves, and that makes me nervous. If I was long this, you got an inside day today, I'd probably be looking to, if not take the gains and go, seriously protect them, move tight stops or whatever. We could go up to this wave 5 target at 330. It could easily extend further, to the upside, but it could also come right back down to 140 tomorrow. That's the problem when you have these vertical ones. You just don't know. There's a lot of unknowns there. Hopefully you were in this and you caught that move. If you did, congratulations. That would be great. Steve wants to discuss why we weren't in this one. It didn't show up on the search, at least that I saw. We'll see what the options look like. I'm glad you got it, though. Well, obviously, they're ultra expensive now with that move. We couldn't have done that in the regular portfolios, maybe in the high value on the impulse side. Super expensive options. Wow. Still a lot of juice in there. Angel, do I still think we regress back to 2,700? Remember, when we look at charts, we're looking at the data that we have available at the time, and things change. And that's the beauty of Elliott Wave, is, to me, it's the most responsive indicator that exists as far as change. I think at some point in time, yeah, we're going to come back down to here. I don't know when that is, but that's Elliott Wave. When this wave 5 will end, whether it's an extension up to 420 or whether we're done at 381, and when that does, it will start to march its way back to this previous 4. That's how Elliott wave stuff works. But the fact that we're at 112% extension now, because we're past that, now you look for a 61.8% correction. So that means that the target now for a corrective move, if it started right now, so let's start it from 381, the target would be 330. So no, 270, at least for now, is not on the near-term horizon. So once we got back to 61.8, then we would take a look and see if there was any potential to the downside. But the first stop now changes from the previous 4's target, they're around 290 to 61.8, a wave 5 correction. We have to constantly evolve with the market. And as I've mentioned, that's one of the reasons that I became interested in Elliott wave, because it is so fast to adapt. Those labelings can change within a day or two, and the market changes within a day or two. And if you're not willing to adapt and change your thesis and move with what the market is telling you, it's a struggle. The bond yields, we're going to look at that. I'm actually going to cover that tonight. We'll go ahead and take a look at the 10 now. I'm going to do a new market update. And so that's what happens when things go vertical. And we talked about the triangles. Remember in the last recording, we talked about these triangles. So they broke out, triangles broke out, and now we're back to test the breakout point. So exactly what, even in interest rates, the Elliott wave triangles do what they're supposed to do. Pretty amazing. But we're going to cover that stuff in more detail in the next market update. Yeah, we talked about SLV. Back on silver, just said, yeah, I heard the physical silver purchases have increased substantially and we may be low. I don't know if that's, if that was part of the stuff that they were touting, along with, paper demands are going to be proven that there's more paper demands on silver than actual silver that exists. And that could blow the roof off of silver. All those things are rumors. Only few people really know where the actual pure supplies are as far as gold and silver, and you hear all kinds of conspiracy theories around those as well. I think the most prudent way to play the metals is to play along with the fundamentals behind them, which is looking at the dollar, looking at interest rates, looking at liquidity, the M2 money supply, those things, those that have direct effect on it. If people are buying physical silver, I don't think that's, we had a silver boom like that. Geez, maybe 30 years ago, people were actually buying. I actually had some too as a young guy. I had silver bars. That's how much of a mania there was. It didn't really move the price of silver that much. So anyway, it's interesting though. I'll give that momentum search to our subscribers. I do look at volume. Who asked that question? Steve, I do look at volume. It's included in the searches. I just won't necessarily put it on the charts. Always look at volume. You will hear me say numerous times that we can look at Elliott wave, we can look at Fibonacci, we can look at the DMI. Having price to volume action as part of your plan is always a smart thing to do. It's one of the oldest technical indicators, if you will, that there's been since the beginning of time. Price to volume action will always matter. And it does, and it's in our system as well. It's in the searches. I just don't focus on it a whole lot because I'm looking at the other indicators usually a little bit more. Agreed, Helmet, on AXOS. It was interesting. Any thoughts on RTX? You guys asked the question so fast that it moves the screen. I can't see them. Raytheon. Really nice looking wave 4 test there. The wave 4 came 54%, so basically a 50% wave 4 correction, right at support at 65. That looked good. Bit of a descending triangle here as well that we're trying to break out of, but that's just today. So remember, that's meaningless. So today's move doesn't mean a thing. Tomorrow's move matters. If we get a follow-through day, then we're probably running, the ADX has a way to go. But we could be mounting a run up to that wave 5 target if we get a follow-through day today. The ADX is just not really ready to give it a little bit of boost yet. So would have preferred to have seen that breakout attempt be a day or two later. But we'll see what the confirmation is. I mean, we could confirm that move and then maybe bump our heads a little bit here at the wave 3 top. And that lets the ADX really catch up and run, and that builds momentum to blow through there and hit the wave 5 target. Any of those things could happen, but it's certainly an interesting looking building chart. PSTG. Trying to break through that wave 5. Man, that ADX was pretty high on the wave 3. I would like to have seen that ADX come back below 20 before trying to make this wave 5 run. And so that makes me nervous on whether it can get through this level here of the wave 3. Is there, and then we're right there. And maybe, again, the ADX doesn't always have to get back to 20 just because I prefer it doesn't mean a thing. It could turn and run back to the upside and we could run to this wave 5 target. Just would have liked to have seen it gather itself more to have a bigger momentum rush to it, but it could easily hit that wave 5 target in the next few days. But I don't know how much further it could go after that with we're already starting with the ADX so high. Just not a lot of movement or running left. Carrie, when I have other positions in the same sector, does it shy away? I like to look for the best charts. And when there's more than one chart in the same sector, that doesn't necessarily make you want to run away from it. In a way, it kind of makes you feel like, all right, that whole sector's moving. Let's pick the best of that sector to move. You don't want to get too carried away, though. 2 or 3 positions in the same sector is probably a good enough exposure. So if I had one, I wouldn't shy away from putting on a second one. If I had 2, I might not shy away from a third one. But at that point in time, yeah, it's like, all right, we got that sector pretty well covered. Let's look for other things. But in just general terms, we want to put the best charts out there as alerts, knowing that, again, nothing's 100%. There's no guarantees, but let's put the best charts out and see what happens. UA, Apple, and Amazon. Amazon had earnings after hours today. So, tomorrow's good. Jeff Bezos is stepping down. I don't know if you heard that or not. He's stepping down as CEO. So the next in line's taking over. That was big news on Amazon. After hours, crushed their earnings and making $1 billion a quarter now, or something like that. By the way, I also wanted to share this with you as well. If you're fairly new to options trading, option volume was up 40% in the year 2020 over 2019, 40%. That may not sound like a lot, but option volume has been increasing, has been the only aspect of trading that's been increasing for a number of years. So with that build and to see it jump 40% in 2020, and they're saying that it's already on pace just from what's happened in January to exceed that for 2021, options trading is where it's at. And we've been saying that for a while, but now there's numbers to back it up. As far as Under Armour, looking for a break above that wave 3. I want to see more out of the ADX. Now here's the potential though. There's the ADX has broken below 20. So I like that better. We had a really nice run. There's my 45-degree angle, a little bit of a correction. Didn't give up a lot of the move. That's what happens with a 45-degree run. So a little bit of a correction here, just at the 23% fib level. And the ADX is below 20. If it curls back, we could take off there. I think a more prudent, if you're not in this yet, more prudent position would be wait for it to break through that area there and break that wave 3 high. An aggressive move, you could get in now. If you're in it, I see no reason to get out. Apple. We hit the wave 5 high. We closed our position. So right there at 130. So Apple could turn and run at any point in time, but the key level is 130. The ADX it needs to reset itself up, I think, for another major run. Apple may move a little bit through here. We'll see what happens. It's not a whole lot of direction there, but the near term is you want it to hold 130. And if it doesn't, then we'd have to look at some of these lower levels. But we've got a good wave 4 there at the 38.2% fib level. Problem is we spent 3 days at the lower end of this tap box on the wave 5 target. Amazon, again, all this could change. It didn't seem to be affecting the stock too tremendously after hours. We had a pretty nice breakout out of this triangle. And then comes the news of Jeff Bezos stepping down, going to spend more time with Blue Origin and some of his other ventures. But it's been known that he was going to do this for a while. People thought it would be a little further in time before he did it. So tiny bit of a surprise, but not a significant one. So Doji today with the earnings after hours, and we'll just see how things play out in tomorrow's trade. But at this point in time, it looks to be breaking to the upside. And nobody on the financial networks talking about the earnings report really thought that news was going to affect the stock too much. We'll see at the open tomorrow. MSTR, we've looked at that one in the past. This was a darling of when I first started trading. It was one that we traded a lot, Mr. Looks awfully good. But to get the ADX is so high. I mean, the ADX has been above 50 for a long time, so it certainly makes you wonder how much longer we can move to the upside before it needs a rest. It doesn't have to correct. It could just go sideways for a while. You had a little bit of a triangle here. There's your doji day before the breakout. And it broke out, but how far can it run with an ADX already at 50? I just think it limits the upside move. Let's see what the CCI shorter term looks like. Hey, it might get a little bit more out of that move. Maybe a little bit more. Because remember, the CCI is very responsive, so it moves quick. So you might get a little more out of it on the breakout. But it just doesn't have enough momentum to go a whole lot farther with the ADX that high. Good job, Constantine, on your butterfly. We'll get those Thursday night We'll look at Telray and then we'll wrap things up for tonight. Let's see what that THCX is doing as well. You can see here that we have moved to the upside out of this bit of a triangle here, the consolidation. We talked about this, that they needed a rest. All these cannabis stocks. That is the definition of a breakout. Again, gosh, I wish they weren't so vertical. I like it when they break out this way. It's not super overbought from the 10-day moving average, but here again, we have a breakout with the ADX above 50. How far can it go? Just think there's a limit to how far this can go, and maybe it gets to 27 out of that, but there is limited. I know it doesn't seem like it when you look at a pattern like that, but there's just limited fuel for that to go higher when the ADX is already that high. So with the momentum search, you know, you can look for it when the ADX is lower. So thanks, everybody. Appreciate your attention as always, and look forward to seeing you again next week. If I didn't get your question, I apologize. You know, please come back next week and we'll do it again. We spent a great deal of time just looking at charts towards the end, but I hope you take my thoughts in the beginning of this to heart if you're dabbling in that Wild West world out there. So thanks, everybody. Have a wonderful week. See you next week.